This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Well, today on the podcast, I have Doug Stewart. Doug is based in Charlottesville, Virginia, a couple hours from where I grew up. I've been to Charlottesville a bunch of times, played some baseball there in my youth and some tournaments. And Doug is with a firm and started a firm called Sherwood Forest. And we're going to get into some of the specifics. You're probably going to guess already out there, at least you should be guessing, you, the audience, that Doug is in the trend following space. So, Doug, welcome. I appreciate you for stopping by today.
Mike, I appreciate it.
So let's, I try to get everybody, because I think when people listen, whether they're an established trader or whether they're a new trader, I think everybody just relates to the idea of where did somebody come from? Like, why does Doug Stewart, why does he get out of bed? What makes him tick? And why don't you go back and start? Because I think you have an interesting background. I think it starts with teaching. And maybe you could start there.
Sure. I never would have guessed that I'd end up in the financial field. My desire to help others or that kind of thing started actually as a teenager, volunteering at a hospital for 5 years through my high school years. And going to college, I ended up majoring in education. And actually, with the cap and gown still on, it came to me and said, how am I going to support a family on a teacher's salary? And so that, I pondered that question for about a year until someone introduced me to the financial services world. And
so you never went the teaching route?
No. Never actually got my degree, but never went and got my license. I was.
So you literally got the degree, and as you were getting the degree, the light bulb moment was going off. Like,
it was a panic moment. What did I just do? What did I just did? So but a guy came to me and introduced me to financial services, and I didn't know that much about it, and I blew him off. And a couple months later, he came back. He was trying to get me to open an account with him. And he took me out to lunch. Was this just a broker? Exactly.
Okay.
Yeah. And he took me out to lunch, and the next thing I knew, he told me a story. He told me about the service of financial services and what good it could do people, and that's when the real light went off. And I said, "This is what I want to do the rest of my life."
Okay. What year are we? So everyone can follow along. Where?
95.
95. Okay. So yeah. right about. Netscape went public the summer of 95. So you're talking dotcom bubble starting time.
Yes.
Okay.
Didn't know it then. I went in, pretty raw and open to learning. Grew up as an athlete, so always was willing to be coached and to work very hard. And so I get into the financial services, go through a couple of different companies, and learn what the industry had to teach me. And what's funny, as a broker, a lot of that education comes from wholesalers coming in, buying you lunch, and teaching you about their product. And everything that was put in front of us at that time, as you can imagine, was the hottest technology fund. So I got on board. I got with a regional brokerage firm. And actually, in 1999, I started with a regional brokerage firm, was Rookie of the Year in 2000 at the firm, and gathering a bunch of assets, doing everything right, and then the bottom falls out of the market. And that was painful. It was very emotionally distraught, as I had done everything I could do. I didn't know what else to do, and all I was doing was fielding calls from clients, saying, "Hey, what's going on? What can we do about this?" And I really didn't have an answer. In fact, I remember a low point came when a client that I had sold an annuity to was really distraught, and I said, "Listen, at least when you die, your family will get their money back."
Wait, before you go on from here, because there's a period of time there that was a pretty historical time period that I want to kind of get you to think back to? Because here you get introduced to the industry in 95. Did you start working as a broker at that time, or was it a little bit later?
It was a little bit later. I actually went on board with Primerica Financial Services. That was my beginning.
And what year would have that been? That was
96.
Okay, 96. So we're talking square in the middle of the dot-com bubble. So you're at Primerica Financial Services, and what role are you in at that point in time in your career?
I'm an agent. I'm learning financial planning. Had a great mentor there, which was good for financial planning. But it was about collecting assets.
But didn't you? I mean, this was one of the great. I mean, there was no negativity at this time in the industry, so it was roll up your sleeves and here comes the money. So here you are, you're just starting at this point in time. Look, if it would have been 1994, because that was when I was looking at some various jobs on Wall Street. 1994 was like the death knell of hiring on Wall Street. So, but even 2 years later, it was an entirely different world. So, what were you feeling when you got in there? I mean, clearly you're seeing a lot of capital. You're seeing a lot of success. What was your emotional feeling that you're in the middle of this?
Opportunity. I thought it was I'd found the path, and I knew that it was going to be from here to riches right away. And with that particular company, there were some other challenges, and then I had personal challenges with my wife getting pregnant. And I actually had to go to Nations Bank. And I went there and learned kind of banking, and then went back into the brokerage field, because that's where I ultimately wanted to be, because in my eyes, that was the top of the hierarchy. And so it was in 1999 that I got involved in purely securities at a regional brokerage firm as a stockbroker.
Gotcha.
So we're talking really at the pinnacle of the stock market.
The NASDAQ was, I mean, people that maybe if they're younger or they forgot, the NASDAQ was up, was it 99 or 100% for 1999?
Yeah, I believe so.
On a pure buy and hold basis. So all those folks out there that want to say, well, hey, Covel, buy and hold could work. Yeah, sure. For 1999, buy and hold worked great.
Yeah, well, diversification was buying Cisco on Tuesday and buying Cisco on Thursday.
Yeah.
So it was and the whole industry was saying the same thing. So being new, being fresh, we were buying into it. Being a little bit of a conservative nature, we didn't go all tech rally, but it was definitely a picture had been painted that this is the way it worked. We had all the brokers went out to these expensive lunches and dinners, and it was all the brokerage firm. So the life was
one more question
curious.
Before you move into your transition and how you kind of went the trend following way. Was there a specific moment in time, either a date or a memory or an event? I mean, we all can look back and know in March of 2000 was a pretty pivotal moment in the NASDAQ, but was there something in early 2000 that you can recall that was really just was seared into your brain specifically?
As going up or going down?
Going down, when you realized that the emperor had no clothes.
It was late.
Late.
It was where myself and all the brokers that I knew, we were struggling to know what to say to our clients. We had no idea. There was no education coming in that was giving any clues to what was really going on. It was a continual message over the squawk box each morning to buy these dips, and that's what we were doing.
So, go ahead.
Yeah,
I'm sorry.
For me, it wasn't until 2000, late 2001, 2002, that I just started getting very frustrated. And by the bottom of 2002, that frustration turned into anger. I mean, I was mad at the industry. I was mad at everybody who had said they taught me anything. And it was in the and that's when I said, I'm out of here. And in the
your notes to me, you said you hold a grudge to it. You said the anger grudge part. I want to explore this. What was the anger?
A little bit of my personality comes out, unfortunately. You never do me wrong. I'll do you right every time. You do me wrong, and I'm never going to forget it. And I had regional managers that were that I was holding accountable to, and it was just a personal thing. It was when we'd see each other. It was I kind of let them know what I thought about the whole structure. So I said, I got to do something about this. I can't be a part of this. And so I took a very small book of clients and went off my own, went independent in the first quarter of 2003. And these clients were, they were slightly conservative portfolios. They didn't get crushed as much as you may imagine, but they were still licking their wounds. And it was very few that that came with me. And what I did at the bottom of first quarter of 2003, because what I wanted to do, I wanted to find the answer, because the question I had on my mind was very simple: who took my money? And it was the same question, who took my client's money? Who took everybody's money on this way down? Because I knew that so many average people lost so much money. And so at the bottom of 2003, what I did with the clients I had was I bought Dogs the Dow, which worked really well because the bottom had been flushed out and we were just going up. But during that time, I went on the internet and started reading everything I could to follow up on that question of who took my money. And I was a bit shocked that the answer was the guys who made the money on the way down were the guys who made the most money on the way up. And that surprised me. I wasn't looking for that. And then I stumbled upon Jack Schwager's the Market Wizards. And I read that, and it just opened up the world to me. That's what I wanted to do. And it was soon after that I stumbled on your work. And the whole turtle story, I've got all your books and seen your movie and such. And it was between 2003 and 2007 that I quite literally became kind of a recluse and spent 10 to 12 hours a day studying this stuff 7 days a week. And that involved studying technical trading and trend following, and then trying to figure it out. And I didn't have a mentor. I had these books to go by. And it was I have to say that it took me 4 years of trading with my own money before I was comfortable with the system. And then
So Skype occasionally will nick us, and we got a little nick there right where Doug was talking about being a recluse and immersing himself for 10 plus hours a day. Let you continue, Doug.
Yeah, well, it was really getting into the technical analysis, but there was a problem with that because for a while, I mean for months and a lot of dollars, the technical analysis I used as a predictive tool, which I think that's a mistake with technical analysis. But that's the path I went down for a while, and I realized that wasn't trend following.
But stop there for a second, because I'm not. You are very experienced guy at this now, so this is old hat to you. But that's a loaded sentence that you just said, okay? Because there are books upon books, websites upon websites, big names that appear on Bloomberg and CNBC all the time that come on with their charts and tell you what's going to happen next on some predictive technical analysis. Why don't you just define for a second for listeners out there what predictive technical analysis is to you?
Technical analysis is a study, let's say, of historical price patterns which are driven by supply and demand, and it's a visual measurement of human behavior. So when you see certain price patterns, it suggests that something in the future will happen, and it makes a lot of sense. But I've seen it enough that these patterns reverse or don't work. So my question is, what value is it if I'm not sure it's going to work, or if it does work? When I think about trading and markets as predictive and non-predictive, I come to the position that technical analysis is not any better than fundamental analysis as a predictive nature. I think the whole idea of using those vehicles to predict is where the mistake comes into play. I think that's where it really comes down to risk analysis, risk reward, knowing how much you have at risk and when are you determining when you're getting out?
Let me take another step back though too, because I know you mentioned it, and for those that are familiar with it, they're going to know instantly what you're talking about, because it's pure. Like if you know the secret decoder ring, you know what Doug's talking about. And you said, okay, well, I picked up Jack Schwager's Market Wizards. Boom, I had the light bulb moment. That was it for me. Okay, I'm going to put you on the spot. What we all, listen, I know, you know, other folks out there, if you've not read the Market Wizards, well, and you want to be in the investing world, trading world, and you want to be making money, you haven't read the Market Wizards book, there's something wrong with you. That's the only nice way I can say it, you know? But I want to know, Doug, from you, was there anything specifically in the Market Wizards book from either a particular trader or a thought, any one thing that you really kind of walked away with where it was like, boom, in the gut?
Yeah, and it wasn't. What it was looking at all the traders and finding what was the commonality, because they all had their own takes, their own views on it. But what was the commonality? And to me, it was not so much of a predictive nature. It was the fact that they managed their risk. When they put a trade on, they knew, in whatever personal way they did this, they knew how to get out of it. And I think that was what was consistent through all the guys. And that's what I came back, and that's the philosophy that is applied to the strategy every single day. Because from there, I know that, you know, I can live for tomorrow. And that's, I think that's the key thing.
So you leave this early brokerage part of your life and career. You navigate the dotcom waters. You're in early 2003 with Dogs of the Dow, and then you make this research process where it pretty much gets you up into the kind of 2007 time period. Now, how are you? I'm assuming some of the clients that have followed you up until that point, perhaps didn't. You know, you were learning all this new trend following way on your own. As you said, you're very reclusive about it. I can relate to that. But at some point in time, you had to kind of lay it all out and show people the fruits of your labor. So how did that happen? And how was that when you had assimilated all this new knowledge and felt comfortable and had your system? How did you expose your close people to it? How'd you do that?
Well, that was a time where I always had quarterly meetings with my clients, but this was a big one. And although I had discovered what it was about, I had discovered the way, because my goal became, for my clients, I wanted to make money for them in every cyclical bull market and in every cyclical bear market. I didn't care about the day-to-day and, you know, weeks, whatever, but when the market went up like it did in the 90s and then down like it did from 2000 to 2003, I wanted to make money in both of those areas. So, but I wasn't confident that they were going to believe me. So I took a large Tupperware container with about the 40 books that I had read on technical analysis and trend following and such, along with a whiteboard, and I went and visited every single one of my clients' homes and gave them this 2-hour, 3-hour presentation. And I said, listen, I figured it out. And I got a 100% participation rate. They all said, yes, we'll do it. And I don't know if it's because they said it to get me out of their house or what it was, but 100% participation rate. And we started with the program in April of 2007 and ran it separate accounts, you know, and the numbers, you know, we've had the numbers audited and go back and that kind of thing. And then, you know, for us, we had the fortunate year of 2008 to come out, which was the ability to really solidify those clients forever, because, you know, we showed substantial gain. We made money in 2007 as the market went up, and then we made substantial gains in 2008 as the market came down, and that was achieving our goal.
So one of the things you mentioned to me off air, you said that you had an interesting experience following October of 2008, and just for folks that aren't, you know, keeping their calendars in front of them, October of 2008 was the month. That was the biggie, and that was the big downturn. So what did you experience? And tell me about what happened to you in November of that same year.
Well, I got invited up to a seminar or a panel in New York. It was in late November, and I guess we were up about 30% for the year that year at that point. So I had the advantage of knowing that the numbers were really good, and it was a panel. I was a panel participant. There was the press there, about 60 people in the room. And
what was the panel on? Do you mind if you don't want to name the other people? What were their backgrounds? It
was all money managers.
Okay.
And it was all we were supposed to share our views on the market, views on the economy, and that kind of thing. Which I wasn't going to have much to say because I wasn't predicting anything.
You were the only trend follower on the.
Yes, this was a very traditional crowd.
Okay, and the other guys were just all your typical. Not saying this is a pejorative, but just typical fundamental guys. So
exactly.
Okay.
Yeah, and for about the first 2 hours, there must have been 7 or 8 very esteemed gentlemen who go up there and they'd speak about the GDPs of this and the inflation here and issues with China and all this kind of thing. Although most of them were down for the year substantially. And so it was my turn. It was just before lunchtime, and I went up to the podium and thanked the press for being there and such. And then I said, "So you guys want to know what I think is going to happen in the market?" And it was at that moment that I did what maybe was a very embarrassing thing, and I began to sing. And I started singing the song "Up Where We Belong" by Joe Cocker, because that song is a trend-following song. You know how it goes. It goes, it starts, "Who knows what tomorrow brings in a world," and I substitute the word, where few stocks survive. And then it goes on to say, "The road is long and there are mountains along the path, but we climb the stairs every day." And so I was singing this song, and they were a little bit like, "What the?" And then they kind of got the joke, and the applause started, that kind of thing. But the idea was that I had no idea what the market was going to do, and I went ahead and shared with them that many of their views were still this buy and hold mentality, and that we, if you go back to last 110 years, that didn't work. That I would say that more than 50% of the time we're in these volatile secular bear market type of conditions, and that we needed a strategy that was tactical and could follow these markets. So after the meeting, when everyone was congregating, one of the gentleman, the money manager, who was the most esteemed guest there, he was in his 70s. He came up to me and he said, "You can't do that again." And I said, "What's that?" He says, "You can't make a call like that again. That was a lucky call." I said, "That wasn't a call at all." And he says, "Well, do you know Nassim Taleb?" And the guy could have mentioned 100 authors that I wouldn't have known who they were. And I said, "Yeah, the gentleman who wrote The Black Swan." He says, "So what do you think of that?" I said, "I think that book suggests that which you cannot imagine, thus do not prepare for, can kill you." And he was a bit taken back. But it was really an immersion of myself in this traditional view of the market still being done. I mean, I look at.
Well, did he want to argue with you, or is it? What is he just? He didn't know what to do with you, so it was like, "Can I get away from this guy fast?" Or what?
That's exactly what it was.
Yeah.
I mean, I find
that's what they do to me a lot too.
Yeah, I find that communicating with traditional brokers, and I think most people will never get trend following because it is against human nature. And that goes along with the professionals also. When we think about the ivory tower money managers who went up and down with the markets and continue to do so today based on a predictive nature, I just think that there's a total misunderstanding, or almost a philosophical or a personality trait that has to be there to understand trend following. If you've got a big ego and want to be right, or that type of thing, I think you're just not going to get it. It's almost more Eastern.
Let me ask you a question. Do you think though that when they hear you talk, when they hear me talk, they hear David Harding talk. I saw him recently on CNBC, and Harding comes on there and he says, well, I can't give you any predictions. And the next thing out of the fast money crowd's mouth is, can you give us a prediction? And I almost wonder, I don't want to say they're ignoring what's being said, or it's either that or they literally can't stop to even admit or even allow themselves to listen to what you're saying and go that path. Because if they do go that direction, they have to admit themselves that what they do on a daily basis. The only word I can think to say, and maybe this is too harsh, but if you're having a conversation with Doug Stewart, like that esteemed gentleman in his 70s was, and you raise some red flags, you are forcing him to ponder his entire career. You're forcing him to ponder what he says to clients every day. You're forcing him to ponder his own honesty.
Correct. Yeah. I don't think that, I don't know that if it's intentional or not. I tend to think that it is the base of their entire existence, of their entire value. And if they were to suggest
their power base,
yes, that all their research, that all the value they bring to their table is that of great research, better than everyone else, which allows us to predict the future better than the next guy, that's why you should do business with us. And if we bring to the table that there is no value in that technical analysis and the entire study needs to be focused on what is now, and then with what now changes, then we can change. I think they have a great problem with finding the ability to market that kind of value.
Do you recall what he specifically, because he brought up the black swan, right? He brought it up?
Yes.
So what was his intent in bringing that up? What was he?
I think that where he was trying to corner me was to suggest that this was a lucky event. That this was an event that you happen to be on the right side of the market, and it's your chance of doing it again are small. But he was coming from this position from the idea that it was a call, that there was some type of prediction that I had made to get on the right side of the market, and it was simply, in fact, the transition from 07 to 08, when you go back and look at it, was a beautiful, nice, smooth rollover of a series of lower highs and lower lows in multiple sectors. It was in January of 08 that, in fact, I remember we started shorting energy, and I think the market fell 6% that month, and we might have made 6% that month. But so it was. I think that's the angle he was coming from. That that it was lucky, and you're not going to be able to do that again. And I suggested all I did was follow the market.
Did he not understand what you were saying, do you think?
Not at all. Intentional or not, I don't know, but no.
And so at that point in time, it becomes one of those weird conference conversations where you kind of, people's feet start to move like quickly, and he just wants to get away from you.
And that's exactly what I remember happening.
Yeah, these are a pretty typical pattern that exists.
Yeah.
Well, let me switch gears a little bit and bring you up to today, and let you talk about some of the lessons and experiences you have as working as a trend following manager for clients today. And maybe we can get to some specifics about maybe some of the differences in how you do things. If I'm not mistaken, though, you approach this from an ETF standpoint.
I do. Again, very conservative by nature. And my particular strategy was designed with the average investor in mind. And what I meant by that is when I took my original investors, I thought about the amount of drawdown that they would be comfortable with. I never wanted them to have to call me and say, hey, look, we're down 30%. So I wanted to dial down that drawdown. And the idea of an ETF allowed me to remove the single stock risk. So, and the idea that 80% of a stock move has to do with the sector anyway, we were able to eliminate any kind of aftermarket effect by one particular stock. So, and with ETFs, gaining in the type of exposure you can have, and also inverse and international and some of the sectors, it was the time to bring this modern day tool to a strategy that goes all the way back to Jesse Livermore and before. And it made it very simple to apply. And the idea with what I do is not to come up with something complex and shoot for the moon every year. It's the idea that sometimes we make a little bit of money and sometimes we make a lot of money. And sometimes we lose a little, but we never lose a lot. And I think that's the message that we try to bring in. If we look at this over a 5 and 10 year period, we can substantially outperform and get people to their goals, because when we compare the other side of it, we're looking at the last 10 to 12 years now of where the largest population in our history is going, and they're back where they were 10 years ago, yet they're 10 years closer to when they wanted to retire. So the answer wasn't very complicated. So using the simple tools such as an ETF, worked very well.
Somebody got on me on Facebook earlier, and they said that they said, I mean, look, my natural place to be is like, try and do the right thing, pay your bills, don't take out a bunch of debts. I hate to see the government waste money, all these kinds of basic things. I think most people, regardless of the political spectrum they sit on, they probably agree with these types of things. But somebody said that I was looking at the negative side of things. And I'm actually a pretty optimistic, positive guy. But I find with the trend following approach, and I think I don't know if you use the phrase the media or not, but you have to worry about the downside. You're spending the vast majority of your time worrying about how not to lose your clients' money. Why don't you talk about that a little bit?
That is one of the most difficult conversations to have, depending on the market environment that we're in. Managing money for yourself in trend following is a joy. Managing it for others is quite a task, because you're dealing with people, even brokers, who are actually victims of their clients, because clients run brokers' books, not brokers. Because of the daily onslaught of this information. They're getting so much information from CNBC and such, and they're getting so many opinions. And then if they're watching the S&P 500 go up, they are, and you're not correlated, which we're very rarely correlated with the S&P 500. You can lose clients because you're not making them enough money. And it's over this week or this month or even this quarter when it's a struggle, but you're trying to get them to understand it's a longer term approach. It's the way to look at trend following is one way is, have you ever lost me a lot of money? No. Okay, then we're still on board, and we know that we're going to continue to look for that next trend in either direction that comes about.
But like you say, that's still difficult for people to grasp, because, like I said, I was having this little conversation on Facebook with someone, and it was more like, well, Mike, how do you know markets aren't going to just take off? Why are you looking at the negative side or the dark side? And I thought it was an interesting choice of words, because I kind of thought to myself, well, it's not negative or dark. It's just reality. It's just real. It's just
right.
Objective to try and work. We have limited capital. You have limited capital. I have limited capital. Everybody has limited capital. So if you go to zero, you can't play the game anymore.
Yeah, I think people just can't get their arms around the idea that you don't have an opinion. It's that Zen approach that just says what is. The words they use suggest that going down is bad and going up is good. We talk about that the market manipulators are bad when they can bring the price of oil up, let's say, but we don't talk about it going down. So there's always a good and a bad in people's minds. And well,
you just used the word manipulator, not speculator. Boy, you just added it. You added to the fire right there yourself.
Yeah, I mean it's the perception of this. To be able to put the idea of shorting a market is un-American. That's these ideas of good versus evil.
Do you get pushback? Do you get pushback on the shorting?
I don't know. Once you start making money for people on that side, they tend to change their opinions. So not so much from clients anymore, but we still hear about that once in a while. But our objective is not to take a political view, or good or bad, and we're never going to affect the markets. So our desire is just to protect and grow money in any environment. And if that involves shorting, that's what we do.
Well, so let me as I kind of start to head towards wrapping up with you, let me ask, is there anything I've not asked about today that you think would be interesting to the audience? I mean, something that we've not talked about. I know we've covered a lot of territory, but are there elements of what you do or things you've learned, experiences you've seen, people you've talked with, good stories that people can relate to? Anything that I might want to know myself?
Well, one of the things, I don't want this to be a commercial for the strategy at all, but one of the things, we think of ourselves like a think tank here. When we go back to the 2000 and 2003, we saw that as a problem and we wanted to fix it, so we did that. One of the interesting things that I've viewed with everything I've read about trend following is the idea that we understand the weakness in trend following, and you've got to be okay with that. We've got to be okay with those times that are trendless markets, those times where there's going to be drawdown. And my partner actually is one of the smartest guys when it comes to volatility research that I've found. And we have added in a proprietary algorithmic model for handling those types of times. And what's interesting about it, it's actually trend following on a micro scale. And we were able to, now 2011 hurt us like it hurt a lot of trend followers. And our timing, we couldn't do two things at once. But what we were doing in the second half of 2011, we had done the back testing on this algorithmic model, but we needed to make sure we could execute it. So we took the second half of 2011 and executed on just very, very small money. So make sure we could get those mechanicals correct. But what this has involved is in those types of markets, and we may be able to identify them when the VIX is over 20. We can go back to the second half of 2011 and remember that we had multiple days of 4% swings, intraday swings in opposite directions. So what we wanted to fix this time was the idea of trend following, that during those trendless periods, that you could actually protect and profit during that time. And it wasn't to do something crazy and something that isn't reproducible and that kind of thing, but it was just taking our view to the micro trend. And what I mean by that is intraday. During this environment, this strategy it gets us out of the way overnight. There's no overnight holding, because we know during those times that whatever news comes out can have most of the move in the market can occur overnight, and you get this gap up or gap down. But it's that intraday movement that we're following a trend following approach, and the back testing has substantial results. But the idea, though, is that we didn't want to just accept the fact that trend following had a weakness. We wanted to identify that period and focus in on it. And so now, and the interesting thing about it is, well, when do you know to use that? And when do you know to use a long trend following? It's a dynamic application or switching from it. And it simply goes like this. It's very easy to explain. If all of our portfolio is involved in different ETFs, from domestic to international ETFs, all going long on the upside, and we start seeing some of them get stopped out. Well, what we're doing is we're raising cash. And as that cash gets raised, we're 100% invested, we're 95% invested, 90% invested. As these individual ETFs begin to break down, it suggests that the current trend may be weakening. And as that cash is raised, they go into this volatility program that's looking more at the micro trends. So we're not predicting this. In fact, many people ask, many people put together their portfolio based on their economic view. We look at our portfolio and are able to suggest what we think is going on, but we kind of do it in reverse. Because if we were recently 100% invested on the long side, and we are now 65% invested on the long side, we would suggest that the trend that was in existence is weakening. And then we may look at the VIX and say, look at this, and we've got this money now in a dynamic fashion, switching over to these micro trends. And then,
were you saying, essentially saying that if you just looked at your performance, your entries and exits, you could almost tell somebody what's going on in the economy?
That's exactly right. And it's exactly opposite of what you'd think.
Right.
We're positioned this way because of this economic view. That's not it at all. And the other thing is, for years, I read as much stuff as possible to verify my trend following. And what it took me a long time to learn was the more that I read, the less confidence I had in my system. I was getting pulled. I have CNBC on all day, but it's on mute all day long, because the next guy that comes in here says something, I go, oh my gosh, did I consider that? And let's look at this. And you have to turn off all the noise.
So why do you have the picture on?
Just in case there's a breaking news flash or something. Maybe you'll take me to the next level, Mike. Maybe I'll just turn it off forever.
Yeah, I will have to say that I actually didn't have it on. This is not meant to be somber, but I can think of events like 9/11 and things like that where I think people could see the benefit. But yeah, interesting. Well, let me ask you. I'm going to do one quick follow up though, because I would have normally asked this at the beginning. So here you go down this educational path. Completely contrary to the typical Wharton MBA type thing. And you go through these various experiences with Wall Street and the brokerage firms and different styles, and you end up at a strategy that's near and dear to my heart too. But what was there anything as a 13-year-old kid that would have given some indication that you were going to not necessarily do what you're doing now, but the idea that you could trust your instincts, follow certain paths, and not clearly be influenced by an authority figure saying, Doug, you must work here for 10 years, another 10 years, get the gold watch. And you didn't seem to be worried about routine or following the plan that somebody had prescribed, for you. So how did that happen?
I think as a 13-year-old, my parents used to call that a problem. I was never one that fit in a box very well. I spent my time in sports just being good enough to think that I had a future in it, and I didn't. But it was just somehow always being on the outside, and never really understanding things the same way others did. I don't know. Some may say a learning disability. Some may say I don't know. But it was. I think it comes back to a personality or an outlook. My dad worked for the government. Didn't have an influence on me to be an entrepreneur. But that was always my goal. I was always thinking very big, that I wanted to do something big, and going on the inside track never seemed to get me there. I don't know. Maybe it's because everyone else was there. Maybe it was the crowd was fighting there. I thought I'd